Hello, everyone. Welcome to today's session. Let's get underway. We're not going to spend a lot of time going over market conditions. We'll just briefly touch on that since we covered it on Tuesday, and also the morning updates are covering those as well. On the morning updates, if you're not familiar with those or you're not getting access to those, if you go out to the article site, which is just the articles.traderspro.com, or on the footer of the website down here at the bottom, this is kind of long, you can click on articles and that'll take you out to this articles page, and then there's a link called Market Today, and then this first link will take you to a YouTube video. You could also just go out to the YouTube channel and view that. It's not very long, it's 6 or 7 minutes. I do that each morning, and there's an email that goes out around 7 o'clock, about 9 o'clock Eastern time, and it just takes it to this link. And I do a short market update and talk just a little bit about some of the stocks in the new buy list. About 7 or 8 minutes is all each morning to kind of get things rolling. So I'll just do a brief update here, and then we'll get into the discussion and strategy for today. Essentially, what we're dealing with in this market still, we've had this retracement and a pullback moving higher. Let me go to S&P 500, and so we're still in this kind of this hold range. We've bounced off the bottom. We've now taken this first stair step back up above this resistance area and having a little bit of a pullback. Not surprising after really 3-4 good solid days and running into some resistance. Now you can see this area right here is going to be the next stop. So this range right here is going to be the range in play. Pardon me. And so we have a support, resistance, and support. What we want to see now is we want to see this next area of support here continue to hold and ultimately hold, and then start to march higher, and then break out of this level and hold that level and start to move higher. Ultimately, that's what we want to see here as the market is now starting to show some signs of bullishness. We also are seeing the buy-sell ratio, which is also coming back together nicely. This is our extreme range. We still are bears in control. We still haven't crossed over, but now we're working our way that direction. Okay, so this is still, market conditions could still weaken and could ultimately stay bearish, but in terms of this indicator, it doesn't stay this bearish for this long traditionally. If I go back 3 years on this time frame, and you can see some of these ranges here. Maybe this was a little bit longer one in terms of amount of time that we were bearish. This one also, this was the end of 2021 right here, and then we had some length here. So you can see, just based on the length of the line that I've drawn right there, that this one is actually one of the longer time frames that we've dealt with, that buy-sell ratio being negative for this length of time. So we'll see if there's anything to that going forward. My guess is that we're going to at least see some a rally here coming back up. We'll test this. We'll see if we end up getting a crossover and getting a bullish market condition going into the next few weeks. Traditionally, the end of November and December traditionally are good months, and it's cold and flu season, so that makes my lung condition even harder sometimes. I got COVID a couple years ago, and it created a little bit of lung damage, so I fight this darn thing. I try to do as much talking and voice exercise before each of these webinars, so I'm not coughing the whole time, but every once in a while it catches up to me. So that's what we're looking at with the market conditions, and we're seeing, we're not really strong. It's not a real strong condition quite yet. This is the Dow Jones Industrial. We've got 3 in that uptrend. We've got 12 in the downtrend. We've got 14 stuck right in the middle. We are seeing NASDAQ 100 with the buy-sell ratio back up to 1. So we're seeing a little bit of strength there in technology. And if we go to sectors, we've talked about this also with the sectors ETF, the leading sector in terms of rank, this is sorted by the rank, is technology. So we're seeing strength in technology. It's back up into this trend zone. It hasn't shifted back to a buy, an uptrend, bullish trend yet, but it's working on it and showing some strength there. And we're also getting confirmation on this on the buy-sell ratio here with 20 in that uptrend. Let's look at those and see what they are. Broadcom, which has been a leader, it's up 3%. Talked about that this morning in that update. It's an $900 stock now, but it's moving nicely. And NetEase or NetEase, however it's pronounced, nice uptrend, up in that momentum zone as well, a little bit extreme. So, and then Google has actually had some nice performance here recently, continuing this overall uptrend. So we're seeing some tech stocks that are still alive and still working, and that is an interesting state of the market currently as well. So just in terms of our overall bias, we're still looking at, it's part of the reason why this is still mildly bullish, is S&P 500 has just not ticked back up into an uptrend. It's got a little bit of range there. It's got a ways to be able to do that. So we could be stuck right here for the next little bit as the market retraces and kind of works inside of the zone. Our topic for today, what I want to start doing in these Thursday sessions is start going over some individual stocks as well as portfolio strategies. The time frame for TradersPro is typically, it's a position trade methodology where we're focused on 2 to 3 months. Typically is the average holding time of an individual stock. You typically will get, if it's in an uptrend or it's just moving back and forth, you're typically going to get 3 signals per year on a stock. And that's moving from a sell to a buy. So the time frame is a little slower. It's not obviously, it's not real short-term swing trades where we're looking at maybe 1 or 2 weeks. We're looking a little bit longer time frame. And so part of that is building some portfolios of stocks and building out some different strategies and some different ideas. And it's always smart to have, to have diversification among different stocks instead of going aggressively into a handful of stocks. In bullish, really bullish market conditions, we can certainly do that. But when things are kind of counter trending or waffling, or even in a bear market, we may want to reduce the size of that overall holding. So you can see this portfolio. Now there's various portfolio strategies to do. This one is called, this one currently that I'm utilizing is a new buy daily strategy. And that is taking a scan and utilizing that scan and picking the top stock with the new buy signal for that day and adding it to a portfolio for that day. We end up with, as of right now, we've got 15, 20 holdings or so, and and still having a large amount of cash, 60% in cash and about 40% currently. This is probably about as many. We can do different things. Now, as you're building out your strategy and you're building out what you're comfortable with, you want to be able to apply your own individual risk tolerance and your own individual suitability towards any portfolio. So if you're doing something and you're not comfortable with it, then figure out what you're uncomfortable with and create and make it comfortable for your risk tolerance and your suitability. If it's too much to manage to do one daily, do it once a week. On a Friday, look to see what that stock is for in your scan and utilize that on a Friday. It may not be, it's always, that's always the hardest part of any portfolio strategy or stock strategy is, well, what's the very, very, very best one for the day? And that's why there's so many hedge funds and mutual funds and venture capitalists and software packages and you name it, because there's really no perfect answer for that, because every single stock or investment has got slightly different parameters or criteria that may allow for your own individual strategies or likings. For example, this is simply using the muscle stocks list, the top stock in the muscle stocks new buy list. Okay, or not even the muscle stocks, but it's just the new buys. Typically they are muscle stocks because it's a 99 rank, or it's the top. It's sorting it by rank, and so you're able to get these top stocks that are moving. And the rank is based on performance. It's not based on anything else. It's not including fundamentals. It's not including anything other than just the flat out performance of the stock. And theoretically, that is going to include anything of value. If the stock is moving higher and it's got XYZ fundamentals and you think that's good and someone else thinks that's bad, well, if the stock is moving higher, it kind of doesn't matter what we think, right? It's moving higher. And so that may not fit into what you want to focus on. You may be like, let's look at this top one here, Tidewater, for example. This actually turns out to be a good example, because even though it's getting a little bit of a move back today to oil and into the oil's trade it's had a pretty good run. Oil's retracing 3% move in volatility. It's still in this upper range, and it's got really good fundamentals. It's got big EPS growth year over year. It's got big quarter over quarter growth, sales growth 11%. That's a little, that's fine. 20-30% sales growth is also is a nice number to be focusing on. But if we were to have a stock that says, let's see if we can find one in this new buy list. Let's see, let's go here and let's go through the next few and say, I'm going to refresh this just to make sure we've got all the information that we need. Seen some selling here on some of these leaders as well, and that's that's not uncommon. Let's see, new buy list. What I'm looking for, here's another one that's doesn't have any fundamentals. That can certainly happen. It's a biotech stock. Maybe it's still not producing revenues yet. What I'm looking for, and you'll notice that a lot of times you do have fundamentally strong stocks that have worked their way to the top in rank as well. Sometimes there is some price. That one's also. What I'm looking for is not finding it. I'll run into one though eventually. Is some red in here, something that's got some negative numbers. This is actually a good example of a good name as well to look at. So my point is, when building out a portfolio strategy, what we can do is we can create our own, or you can create your own. Let's say, for example, I want this one, this setup here, and I've mentioned this in other classes. I create the screen and I can have whatever criteria I want. If I only want to trade, I only want to own stocks that have a PE ratio of 1. That means they have to have earnings. Then I'm going to have it as 1. And it has to be growing. EPS has to be up. Last quarter EPS, sales growth has to be up. Momentum can't be extreme. Anything above 140 turns out is extreme. But if I want these settings, then I can create my own scan. And in this case, I've got 38 that are in this list. And then what I could do is I could say, okay, my strategy is to buy from only this list. I'm only going to buy stocks that have new buy signals that are inside of this list. Once I create that scan, then I can sort through that and I can look through some of these here. Now I know that the stocks that are momentum stocks, and I've also determined what their criteria are for any other additional things, fundamentals, or maybe I want dividends, or maybe I want volume higher, or maybe I want, all these things. We'll go through a couple of additional examples, but then I can choose from only that list. This becomes my list. That's a buyout. We skip through those. This actually is an interesting stock. It's a furniture stock, VIRC. I don't know much about it, but it showed up in a scan today, and it's up in that momentum zone, and it's gone from $4 to $8. It's had a big run, very volatile. Obviously, that one day it retraced back, but you got more buying into it. Now we're holding into this upper range. Now it's holding. It's at least got 1, 2, almost 3 days in this upper range. So we'll see if we get some follow through on that. But it's had, it had some big numbers. And that run, this run up here could have been based on a recent earnings where their sales and their EPS just had a big run and it continued to get some momentum. And now you get additional investors and traders that are like, well, maybe there's something to that. Maybe the next earnings report's going to be even better. Maybe they've got a cool new product, or if they found a new sales channel or a new sales niche or whatever the case may be, it's working, and it's working pretty well to this upside. That would be a stock that I could then add into my portfolio. Now, the value in portfolio management is diversification. Diversification reduces risk and volatility. When you're trading stocks like these, especially stocks that can move really aggressively, then you want to make sure that a 10 or 12 or 15 or 20% move in a stock, either direction, is not outside of your comfort zone. If you see that this stock goes down by 20% in a couple of days, and you're thinking, oh my gosh, I'm down 20,000 because I put 100,000 in this thing, and that's way too much. Now it's a very aggressive mentality. That's why you want to make sure that you're adjusting your portfolios based on a certain methodology. Now, the methodology that I'm employing on this one is 2.5% of capital available. Okay, so if I have, in this case, it's $100,000, and I set up a new trade. Notice it's a little bit hard to see, but right there it says portfolio allocation. It's the third one from the bottom. It says 2.11. Okay, so my allocation is about 2 to 2.5% of the overall portfolio. It's 2.5. As a stock grows, and some of these are getting a little bit bigger, some are not. Weight Watchers was up huge yesterday. It's giving 2 days ago. It's giving it all back right here, and that's kind of what these stocks are notorious for, is big swings, 7, 8, 9, 10%. You can get those kind of swings, but if that needs to be a blip for you in your portfolio, then you've got to go with a smaller position size so that move is not creating, in this case, it's 10, 11, 12% increase on the stock. But in terms of the portfolio, it's relatively muted. Okay, so allocation, diversification, you can decide what that looks like if you're thinking. And this cash number doesn't have to be all of your assets. It could be, okay, I have $100,000, but I'm only going to allocate $25,000 to this strategy. Then when you're setting up a new tracking portfolio, you can set it up with that 25,000. So you're still managing the entire pie, the entire wheel, but it's not with all of your assets that you've got in other places, and be able to set that up. So in this case, it's 2.5% of capital, and when I get a sell signal, I sell it. And then the new buy signal is coming from that scan. So it's a mechanized, automated process where I'm taking the top stock each day from the new buy list. I'm adding 2.5% to the portfolio, and I'm selling when I get a sell signal. I also use a stop loss though on the initial amount. Sometimes that it's typically pretty low. Like for example, 890 on Weight Watchers is clear down here. So I'm allowing for some volatility for it to happen because it's a smaller position size, and I know it's going to be volatile, and I don't want to have to be stuck to my computer all day long. I want to build out the portfolio. I want to take the pick. I want to do it in the morning or in the evening, set up the trade, look to see if I have any sell signals, set up a sell order, and then be done. This entire process shouldn't take any longer than 10 or 15 minutes max, or even shorter than that if there's nothing in there. If there's nothing to sell, then that's one less time commitment that you have to look at. And adding into the buy, you can do it in the evening to where you could go in, decide what your percentage is, decide the number of shares, go in and create a market order in your brokerage account that will fill. It's a good till cancel so that it fills first thing in the morning at that price. If you're not comfortable with that and you want to be able to kind of maybe look to see, is the stock going to gap higher, is it going to gap lower, that you could also do that as well. So it's a mechanized system to be able to add into positions each day based on what that method looks like, and that can be different. The other one that I'm starting up and tracking here is a sell to buy. Now the sell to buy is this scan right here. what this is tracking is it's actually tracking the first buy after a sell signal. Okay, and that's what the back test actually is functioning on in this system. Is anytime you have a buy signal, it's the first buy signal after the most recent sell signal, that's what's getting tracked. It's not going to track on the back test, at least, any stock that's gone from hold to buy, which we're still adding into, because the new buy list here, this is adding stocks that have gone from a hold to a buy. This looks like it's going to go back to a hold. But if I'm using this other system, or this strategy, then any stock that is a sell to a buy, let's look at Broadcom. Again, this is today, and that scan is as of the close of last night. So you're looking at this day, and then this becomes the open order. Once you have the signal, you're getting the trigger here. At the end of the day, that's what it closed at. So the actual transaction becomes this next bar, or the next day. The opening price of the next day is where the entry actually starts to take place. Okay. The part of the value of this as well is that we don't have to. We're working on stocks that are moving in an uptrend. They've got, in this case, for the most part, there's a reason why, and that reason why is often that there's either a new technology or they are making a lot of money. Stock prices are a present value of the future earnings of the company. So ultimately, that's what the stock price is trying to reflect, are the earnings of the company. And so as these stocks are moving in this direction, we have a very high probability that they will continue to move that direction. And that's really what the strategy is trying to focus on, are stocks that are moving this way instead of this way, and we try and buy it at a low and buy it at a low, buy it at a low, ultimately moves higher. That certainly is a strategy that is employed by a lot of people, but that's just not the strategy we're using. And for the vast majority of portfolio building. Let me take a second here and just look at a couple of questions typed in here. The question is there a setting under the indexes which changes the amount of stocks found? I only see 9 to 10 under NASDAQ, S&P, Dow. I used to see more. Let's see under indexes. So we're talking about this page. Is there a setting under the index which changes the amount of the stocks found? I only see 9 to 10 under NASDAQ, S&P, and Dow. So if you're talking about this column, I'm not sure if I understand that question. If you're talking about this column, these numbers are going to change. They're going to change every day, okay? Because it's got the total number of stocks, but it's placing them in the category that they're currently in. So S&P 500 stocks, you've got 67. Well, the rest of them are in either hold or sell. Tomorrow, this number could be 75 or 60 or 58 or something like that. These numbers are always changing, and if they're getting smaller, it's because they've now moved from this category to one of these others. They're still going to be there. They're just not here, not here. So when we see these numbers, when this is 200 and okay, let's see the right header, the NASDAQ 100. Okay, yeah, let's look through that. So there's a pagination setting down here where it's tracking the top 10. We made a couple changes that it just loads them faster. So if you have 25 stocks, the default is 10, just so they load faster. So you have 10, you have to scroll to the next page right here, and that'll pull in more stocks. That I understand that question now. Otherwise, if you scroll, if you can select more items, then it'll give you a lot more of the list all in one. So if you're not seeing as many, you've got to go down and you've got to page over to the next one. Okay, that functionality, we're still working on that just to clean it up and make it a little bit easier. But the loading time to load all of them all at the same time, especially the S&P 500, it was just taking a little bit of time. So if you're not seeing those in there, you're seeing less, then you just have to either change this number or scan to the next. Okay, good question. Let me jump back to portfolio. Yes, Wilf, that is a new option. And it's the same with the watch list as well. We were just dealing with the loading time on some of those where we had a lot of users that had 100 stocks or 200 or 300 stocks in their watch list, and it was just taking some time. So in this case, being able to add larger watch lists and just be able to scroll through some of those gives you that functionality there. Portfolio. So the portfolio building strategy, this is one of them. To be able to do that, you can build out whichever one you would prefer. And again, there is no right or wrong answer, but stocks that are moving higher, they typically are moving higher for a reason. And we don't always know what that reason is. But if you want to add your own reasons and say, well, there's so many choices, and I have to have stocks that are large cap stocks, and they have to have fantastic earnings. Okay. Well, if I have, let's say 2020, okay, there's one. Let's go to the 10s and see if there's any there. Let's go to this 5 because this one pulls up. There's only 3 in there so far today. And the reason why is because I'm creating a tighter and tighter screen. The criteria to find stocks is tighter and tighter, meaning there's going to be less and less because it's only looking for really it's really zooming in on exactly what I want. So if I know I only want stocks that fit these criteria, and sure enough I've got 3 and there's 1 in there, you may not get any, then that's a great way to be able to really reduce the number of stocks that you're looking for, is to create tighter and tighter settings. So I could say, okay, I want more volume. Instead of 500 million, maybe I want an average of 1 million. Let's see if that gets rid of anything. Okay, got rid of one of those stocks. Still Eli Lilly and GSK. And those stocks, the thing that you start to get though with that is you start to get lower ranks. So you could also say, okay, I only want those stocks and it has to be above 90. Oh yeah, I'm not even pulling in rank here, but if I said I only want above 90, there we go. There's the one stock that's fitting that criteria for today. And you may go tomorrow and have nothing, and you may go the next day and have nothing, and you may go the next day and have nothing. And then you may have a series where you get 2 or 3 or 4. Okay, so you can decide how you're going to approach. If you have nothing in there, obviously there's no trade for that day. You wouldn't add it to a portfolio. In this case, it's just simply what's the screen that I'm using to determine what those stocks are, and then I'm adding them into a portfolio, and I'm systematically buying them that way, and I'm systematically selling them when we get a sell signal. Okay, and as of now, I'm not getting anything. This portfolio is relatively flat since we started it. Just on September 1st, and so SPY, September 1st was right here. So SPY has dropped, probably 2 or 3% as well. So, and you'll see when market conditions are moving higher, we're going to get some of these stocks that are just really blowing out, really doing well. When market conditions are kind of rough like this, I'm not surprised to see it kind of churning around right there. But ultimately, what will end up happening is we're going to get a handful of stocks that stick inside that portfolio, and we get a handful that are going to be big winners. We're going to get a handful that don't ever follow through and stop out. And so it's a natural portfolio building process to let the winners run and cut the losers quickly. That's what we want to be able to do, is cut our losers quickly and let our winners continue to work as long as they're working. And we're using the entry strategy on either a new buy scan, or we can still use a new buy scan. This scan is still determined by a signal change from hold to buy, but it's got a bunch of other stuff as well. So we still want to use that hold to buy transition, but if we want other criteria in there, we can do that. We could say, okay, I only want dividend paying stocks. Okay, so if we, let's build one out here just as an example. Let's say I want stocks that are $10 or higher. I want market cap that's large, 500 million at least. Let's go a billion. I want volume, 50,000 shares, and I want PE of at least 1, and I want a dividend yield of, let's say, 5%, a minimum 5% dividend yield. I want them to have gone from a hold to a buy, and I want 95 rank to 100. Let's start with that and see if we get anything. Nothing. We don't get anything there. So too tight of a scan. Okay, so where do we change? Let's go down to 90 and see if there's anything there. Nothing in the 90 range. So we're too tight on the scan. Let's pull this back and say, let's go 3% dividend yield, and let's move this down to 500 million. Gone from a hold to a buy. Still nothing in there. So it's there's nothing in that criteria right now, which, you know, it also may be like, well, the market is not providing that for me. I don't want to have to force it and try to find something that is outside of these parameters. It's just not there, and it may never be there while the market is doing what it's doing. I may have to wait for the market to turn up. I'm curious though on what's going to move this. Let's go down to dividends of 1% and drop this down just a little bit as well. There we go. So now we're getting a few in there. So that's, you know, as you're changing your criteria, you're going, as it's tighter and tighter and tighter, and there are fewer and fewer stocks that are meeting those criteria, then obviously, if that's what you want, because you're getting a very, very specialized stock, when you do get one, you can say, perfect, that's the one that I want. I'm going to trade it, and I'm going to add it to a portfolio that is my, you know, my dividend stock holding. I could also do, you know, let's bump that dividend back up, and let's leave it, let's get rid of the PE ratio, and let's drop this down to 90 or down to 80. There's a couple, still only a couple, but it changed them, right? So this one's had a big move. Dividends 5.7%. You know, it's an oil and energy stock, so still not that bad. Have some volatility in here as well. But again, once we're to this point, then we don't necessarily need to be paying attention to what has happened in the past. Again, that's one of the ways to build out some of these strategies in fine tuning the scan. Say, I want to have PE. I want to have something that has a PE ratio, and I want a high dividend yield. I don't care about volume. I don't care about market cap. Let's see what that does. Okay, still only 2. So it's that dividend, I think, that's creating, and that's gap. That's interesting. 5% dividend yield on gap. Nice earnings growth. Big quarter last quarter. That's an interesting trade right there. So how long did that take us? You know, 10 minutes, 15 minutes of kind of fiddling around with some criteria that I may be interested in for my holdings, and I can create that. I can then set these scans up, and then I can add into those as I'm getting new triggers or signals. A couple ideas for you to consider in terms of stocks for this week. Seeing a little bit of a pullback here in the market today. We'll see what the next few days look like going forward. I'm going to end on that note. Appreciate your time and effort, and we'll see you next Tuesday. Thanks a lot. Bye now.